Michael.
Well, hello everyone. Sorry, I couldn't even see the channel as we went live. Welcome to another episode of REKT Vision. It's myself and OSF. You might know us. We're going to be doing a bit of a roundup of everything that's been going on in crypto and macro and left curve stuff each week. I think this is our fourth or fifth show, but they've all been bangers. You can go back and watch them all, apart from some audio issues on some of the shows. But yeah, it should be a nice little roundup here. Oh wow, you're having a drink, are you? This wasn't meant to be a drink session, but you've
I'm sorry for drinking a beer on the one that's not a drink session.
Wow. Okay, it's that sort of a show. It's a summer show, summer beers, right before the Euros.
Before the Euros.
How do you feel about the Euros this year? I don't know if I'm as into it as I normally am for a major tournament.
I think there's obviously more of a build up to the World Cup than there is for the Euros, but that's why I think the Euros are usually really good, because it suddenly just hits you and you're like, oh my God, it's the Euros. And then it has that kind of surprise factor. But England are favourites, and I think that's a massive psyop by the other countries, because we consistently crumble under pressure and underperform when we're heavily touted. You know, if you study the World Cup of 2006, I think that's a good example. So we'll see how it goes. But yeah, at the moment we're strong favourites, and I'm not really feeling that.
We've definitely got a good squad. I think we've got a shot. Come on. I think
we've got a shot. Yeah, but have you seen the odds? We're like strong favourites. Like,
our team is insane. It would be such a disappointment if we didn't win it this time. Last time was pretty bad too, losing on pens in the final. But this one would also be pretty bad.
So anyway, we're 7-2 and France is 4-1. Like, it's a pretty big gap.
I remember Qatar, I didn't really get into it until the later stages, and now I feel like it's going to be the same. I'm just going to have to slowly get into it. I'm based in Portugal, and they take it really seriously here. So, yeah, that's going to be it'll be interesting if England meets Portugal.
You're not one of those guys that watches every fringe group game, like
100%
Hungary or whatever.
100% I do, but it's always on in the background. You know, it's like the Cricket World Cup. It's always on in the background, like, oh, who's playing, and watch the highlights on BBC Sports, something like that. Anyway, we'll get into what's been going on in the market, because probably that's more interesting and why people are here. But it has been not really a great week, I would say. Bitcoin was kind of inching towards all-time highs when we did the show last week, and we've kind of edged back lower and now resting around this 66.5 area, which has been a pretty consistent support level for the last few weeks and even months now. That's been the narrow range. I think the bigger support is kind of closer to the 60k area, but this 66.5, 71.5 range is where we've been in for quite a while. ETH and Solana both down between like 10 to 15% on the week. Definitely not been a good week for altcoins. Bitcoin dominance is heading back up to near 60%. I think it's at 56% right now, but it's definitely been a bit of a soft period here. How are you making? We'll get into some of the in-depth analysis, but how are you feeling about the market here?
I felt in the last couple of weeks, we had the bad price action on crypto while macro surged a lot higher, and I was like, this isn't good for crypto. There must be a reason why it's trading this week. Technically, I think I took sort of 2 or 3 days off being so fixated in the market, and I think when you think about the facts at hand, completely objectively, it's really hard not to, like, fundamentally, from a fundamental standpoint, it's really hard not to be bullish on crypto, because we're sitting here right now with like stocks at all-time highs, CPI coming in below expectations in all fronts, PPI then coming in below expectations in all fronts, and I know the FOMC was a little bit, well, not as dovish as people hoped for, but I genuinely don't think they factored in any of that recent data for it. And like it's just like turbo risk on now for risky assets, and you have the situation where labor market is still pretty strong in the US and inflation is coming down. So it's pretty like, I feel like it's very full on Goldilocks. Like, if I was sitting on the trading desk right now at Barclays still, I'd be like max long and just watching my book grind higher every single day. And it begs the question, like, why hasn't crypto performed alongside macro in the last, let's say, month? And that's despite a surprise ETH ETF approval. That's despite Trump pretty clearly showing support for crypto. like all the headlines are positive and it just seems to be stuck in the mud. But it really does remind me of almost this time last year, really, this period last year when we got the news that BlackRock had applied for a Bitcoin ETF. And remember, Bitcoin was like, it couldn't break past 31K, like it would touch 31, then drop back down to 28. That's what it kind of feels like now. It feels like we just can't get past that 70K level, and then it drops back down again. And then you get all the technical analysis and charts and people saying, oh, this is, technically bearish, blah, 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 because when the market doesn't have conviction, those guys tend to gain the balance of power and people start spewing out all these bear theories. But the facts at hand are all fundamentally extremely bullish. And there's just clearly some supply overhang, whether that's FTX estate selling, whether that's Mt. Gox overhang, whether it's, I don't know, Bitcoin that the US government has. I don't really know, or just people taking profits from a big run this year. There's clearly some technical selling, but eventually I think that will subside. And eventually I think we'll have a catch-up rally in crypto to make up for the lack of performance we've had in the last month. And so I just think all the fundamental things you look at are all pointing to we should be a lot higher than where we are now. And there are technical reasons as to why we're underperforming. And yeah, we could go lower, we could nuke, but I think in the last 6 months, especially as we run up into the US elections, it's really hard for me to not be bullish and foresee, I personally think, new all-time highs across the board in crypto.
Yeah, you got me fired up. I do agree. I think the primary sentiment that I've got from the timeline over the last week or two has just been frustration. We really felt as though we've had some big wins in the space, and every single time we've hovered near that all-time high level, we've kind of just been rejected. There's been some big sell walls that have come in on Coinbase and Binance, and we've kind of just come back down lower. And I really felt like this week was going to be the week. You touched on some relatively bullish data coming out. I mean, who knows if this data gets fudged, but yeah, you're getting lower CPI print than expected. And notably, PPI actually showed deflation on a month-to-month basis, which I thought was kind of wild. I mean, that is unsurprising with oil now down so much over the last 12 months, and particularly recently. But yeah, that's been one that I think has confused people slightly. It felt like I thought on Wednesday or even Thursday we had a good shot at breaking all-time high. And Powell's speech pointed to one rate cut in this year, or at least the dot plot pointed to one rate cut this year, and I believe it's 3 next year. I think the market was kind of predicting that anyway. They were just kind of catching up to where the market already had the predictions. Other than that, we're still predicting rate cuts. I think that's the kind of key point here. There was a point a couple of months ago where people were talking about rate hikes, and we're not really in that environment. And we've got strongish labor market, let's say. Again, there's been some questions about those figures, and you've got falling inflation. Like, it feels like macro is not going to blow us off course. Liquidity is being pumped kind of globally still. That hit, I think, an new all-time high, something like 92 trillion last week. And yeah, progressively we're getting, let's say, softer or more accommodative monetary policy around the world. I don't really see anything in macro that's going to throw us off course. At least there's no knowns that look like they're going to throw us off course. So then you just look at crypto and be like, well, why aren't you rallying? And it's just difficult to say. I think we're probably missing the big picture. This is the one thing about crypto. You don't really get to understand some of the big flows. And I can imagine the one that has been flagged has been miners selling. So, which is kind of understandable. Like post the halving, obviously the business model for these miners, well, the revenue can kind of get cut in half. And there's been, public statements by many of these miners that they're going to be selling their Bitcoin inventory and perhaps even moving some of these resources to different sectors, particularly the AI sector. And even this week, we've also seen in that, let's say, slowdown in mining revenues, now look for consolidation. So there's been various different M&A rumors over the last week with different miners, which kind of makes sense in this sort of environment. But they have been the big seller of crypto. But then alongside that, you do still have whale buying. You have the ETF. The ETF flows were kind of mixed this week, but definitely whales have been accumulating in like the whale bucket that it gets looked at. Have been accumulating, particularly on the down days. It doesn't look like that bad to me. It just feels like we're going to need something pretty strong to get us out of this range, and that really reminds me of 2023, where we went sideways for the best part of a year. And the thing that took us out of that range was the Bitcoin ETF. And I think why people are getting frustrated is they don't see that thing that's going to take us out of the range. What is that thing that's going to be the catalyst that perhaps moves us out of the range? Because generally, when crypto gets like this, you need that spark. You need that spark, particularly a spark after a lot of people have kind of given up hope around it. What do you think there? There was some, obviously we still have the ETF to come, but I think some people, including me, think that's going to be a slight disappointment. Is there anything else you're kind of looking at as a big catalyst for the market?
Not outside of the things that you've mentioned. It does feel like we'll get the ETH ETF trading at some point in the summer. That's what the word in the grapevine seems to be.
Yeah,
whether that's bullish or
said it yesterday.
Yeah, exactly. You know, I believe that was on the Mando minutes.
Oh yeah,
weekly actually. Yeah, I got my information from there. Whether that ends up being a bullish or bearish development, I'm not sure. I do think people are a little bit apprehensive that flows could disappoint there. So everyone's obviously already worried about Grayscale as well, given what we saw with the Bitcoin ETF. So we'll see, how that trades. If anything, I kind of feel like it could surprise to the upside because I think people feel concerned about it. That's my gut on it. Like the surprise, if we have like weak flows and Grayscale just dumping, people are like, cool, like that's what we expected. And if we don't have that, then I think it will be a positive surprise. So there's that. And then, I mean, the next FOMC is the 31st of July. So
yeah,
we have a long time to wait before then. We have over a month, and that's actually the last one they have until September because they break for the summer. So we have, in between now and then, we'll have another payrolls number, we'll have another inflation CPI number, another PPI number, and then hopefully they can, have some better data to make their decisions and commentary this time around compared to on Wednesday. So there is still some significant short-term data points that I think maybe will govern how we trade for the rest of summer because we do have that big gap afterwards. And by then we should have an ETF trading. So I think those are the near-term things I'm looking out for. But as soon as we come back from summer, it's all about elections. It's all about US elections.
Right.
It's all about how much does Trump really want to push crypto. It's all about do the Democrats match any of that or do they still stand against it? I saw something about Biden potentially taking crypto donations now. I'm not sure if that was real or fake.
Yeah, but well, he's rumored to. Yeah. I think with Coinbase, which is ironic.
Rumored to, yeah, very ironic. So I think as soon as summer's over, it's all hands on deck for that. I think, and I do strongly believe crypto will play a large part in the elections, whether it's crypto policy, whether it's just election meme coins. I don't really know, but it's going to be a big part, I think, and that's going to be the big focus, I think, in the last quarter of the year.
See, I agree. I think that is the main catalyst now left for the market. I think the ETF, I think expectations are about right now. I don't think anyone's going to be surprised if it disappoints. And I don't think anyone has, at the same time, has wildly bullish expectations either. So I think we're kind of at the right sort of level there. For the one thing that could really pick up is just a general political move towards crypto. We've already seen it, arguably to some extent with Trump, but it feels like he's going to really dial that up into the election. I think he knows that's a populist topic that he clearly has outflanked Biden on, given the recent policy over Biden's presidency towards crypto, and I think he can really go after that as a populist topic. So I think that's one that we're going to hear a lot about, and then you could have a big rally, I think, in crypto if Trump does come into power, because who knows if he keeps to all the promises, but there's definitely going to be, I think those promises could dial up. I mean, he's making quite a few already for crypto users. Even this week, I think he met with crypto miners and said he wants Bitcoin made in the USA, which I thought was quite cool. So you could see, he's definitely going to be making some promise to crypto users along this campaign trail. At first, it seemed to be a little bit just loose support, and it's now I think he's got the Bitcoin Magazine team advising him. He's doing a bunch of different things, which I think will try and promote crypto in the US. So I think if it looks more likely that he will get elected into that election, then crypto could rally into that, and that could be the main catalyst, I think, for a big rally. Very similar to how stocks rallied last time. I think crypto could have a big rally if Trump were to get into power. But yeah, other than that, I think that's why people are getting frustrated, because they don't see that thing. They don't see that thing that you can, and crypto, along with many other things, but I think particularly crypto, because it doesn't obviously have underlying cash flows. It needs narratives. It needs attention. And without that near-term thing why you're telling your friend or to get involved in crypto, inflows can be a bit more gradual. The more gold-like than let's say Bitcoin-like. So I think that's why people are getting a little bit frustrated about this sort of period. But there's nothing that tells me we're going to massively sell off either. I think that's the other thing, is that I agree with you completely before, is that we have a bunch of, the timeline is now focused on all these technical analysis style chartist predictions of where Bitcoin's going to hit because it hasn't hit a certain level, and those people only really become louder and more followed in periods of chop or bear periods, and then they all get forgotten in the bull market. So, and I'm just noticing on the timeline accounts that I haven't seen in literally months suddenly being followed and being retweeted and all this sort of stuff, and you just realize that we're in that sort of a market, just a frustrated market where people are searching for a narrative.
Yeah, it's frustration, isn't it? It's frustrating price action for both bulls and bears, in my opinion, because we've been range bound. And I think the nature of the crypto market and its participants is people just want something to happen. And because in the past it's been so volatile, and I guess some people are used to that volatility, it's just frustrating when you get this chop. And I think that's just the natural progression of any market as it matures. 3 years ago, Bitcoin didn't have ETFs, didn't have all these hedge funds putting on the basis trade, and all these, a few years before that didn't even have futures. So it used to be a very inefficient market, and now it's turning into more of an efficient market. And I think people have to realize that with maturity comes efficiency, comes less volatility, which has an impact both on the downside and the potential upside. So I think there's an argument to say gone are the days where we just see these 20% wicks higher in Bitcoin and up and up. I don't think gone are the days maybe where we see those down wicks sometimes because of leverage in the system and how much, how many levered longs and stuff that you get. But perhaps some of that's now mitigated with it being more efficient and people being able to capture the basis in between that. So it's just when prices don't move and people get frustrated, I think people start spewing up random theories and taking on side quests, and I kind of think that's what we're seeing now. We're just seeing a very frustrated crypto market.
So in terms of what people are doing in this frustration, what we have seen, and I think we've reported on it pretty much every week, is this growth in celebrity coins. This is very similar to the NFT cycle of 2021, 2022, where you started to see a bunch of different celebrities come in. This week, we got Andrew Tate was probably the most famous, kind of more infamous style celebrity that has come in and has had a token hit 350 million. This is on the back of Iggy Azalea's token hitting 200 million. And then there's a bunch of kind of lesser known D-list rappers, internet celebrities, that sort of stuff that have come on and started to do tokens. But you've still seen massive Solana volumes. So Solana volumes have been flipping ETH on the 7-day and on the daily pretty much regularly. All of this seemingly is happening on Solana, and that's where the majority of the speculation is happening this cycle. We've spoken about this, and I think the initial reaction from a lot of crypto people was just, there's there's been so many rugs in this world. Don't want celebrities here. They're always here to make a quick buck. Now 2 weeks in, and it's starting to get perhaps even bigger, obviously bigger in terms of the token valuations. What's your view?
On the celebrity tokens?
Yeah.
We've gone through so many phases of crypto and NFTs and whatnot, where pretty much every single celebrity drop or launch has ended up rugging, has ended up them extracting value from our ecosystem at the cost of us. And I just think if you're a talented celebrity who's good at whatever, singing or rapping or sports, like, you just don't really, why would you care about coming to crypto and like spending your career on this? Do you know what I mean? Like, if you're a tier music artist, do you really want to dedicate the rest of your life to managing a shitcoin like in crypto? You don't. So it just makes me think there are other forces at work there, which is like, the celebrities have agents and they have people who are responsible for trying to figure out ways they can monetize their brand or IP, and they see crypto and it's a low-hanging fruit, thing for them to come in and do a quick launch and make some money off it, and then leave all the liability and the reputation risk on the celebrities themselves. So that's generally my view. Obviously, I think Iggy Azalea's token has done a lot better than many, including myself, expected, and she seems a bit more immersed into crypto than other people have expected. And I think there's some, I think there's some kudos I think is owed to her for that. The question is how long can you sustain it for? How long can you keep it up for? And eventually the tide turns, right? Eventually one day the tide turns, and how are you going to deal with that? Like, if you're just a random person who launches a shitcoin and it goes to zero, you kind of just like fade away, right? And no one really knows, unless you're like a really bad scammer or a really bad rugger. But when you're a celebrity, you get a lot of press about it, and I can just already see these like mainstream headlines saying, Iggy Azalea makes millions of tokens as like price goes to zero, leaving retail like in tears. And even if that's not actually what happened, and even if she did have most genuine intentions and tried her best, that's the story that people are going to run with when we hit the next bear market. So I just don't see, like, as a celebrity, why you would want to enter the space, because you lock yourself in for massive reputational risk and a massive liability to yourself when you don't need it, because you're theoretically, on paper, you're already successful. And number two, as a retail person, I just, I guess, like, I can see why you want to speculate on it and try and make a quick buck like you would on meme coins, and maybe it can be fun and whatnot. I get that. But, I think people who feel like they're seriously investing in the stuff and want it for long-term holds, I think will end up being disappointed at some point.
Yeah, I think everyone's just here to speculate. I agree with you. It's reputational risk. I think they're being welcomed to a certain extent because these coins can often do well at a certain point. But yeah, I'm fully expecting in a year's time that I would say none of these coins will still be kind of relevant, or at least active, let's say. But maybe I'm proved wrong, but that's just like the history of celebrities in this space. But a lot of coins also won't be active in a year's time. So you could argue that we're just replacing meme coin devs with celebrities. You know what I mean? Like, it's just the aim of the game. I think my takeaway from this is, like, not really the morality of it. It's just that I think this is, crypto has found a product here which can go mainstream, in my opinion, can go mainstream quite quickly. So I think we're starting to see the foothills of experimentation with that. And that might sound ridiculous to people, but this is what's going on right now. Like, I guess we can describe it a little bit better, but, this week, if there's a piece of news out, I don't know how to describe it. So, like, there was some news out this week about Trump's VP pick. And some people will read that news and be like, oh, that's interesting. Some people will maybe even tweet about it on X. And some people will go on to pump.fun and they'll make coins. There'll be thousands of coins made around the words that Elon Musk says, or like who Trump's VP would be, or anything around like GME or any piece of culture. It's kind of extended from memes to just attention and culture, right? Like, any sort of phrase or any piece of culture that you can tokenize now, and you're kind of playing the life cycle of that. And it doesn't necessarily have to be super long. Like even to the Euros this month, there are coins right now for every single sports team, right? And people will trade those coins. And it's not like after the Euros, people are expecting to be valuable, but people are playing this PvP battle as they've become more attention coins. That's how I would describe them rather than meme coins. So what we've really seen is tokenization of attention. And I think that's something that has changed this cycle. And people are okay that they don't have to be long-term valuable because they're really just here to speculate. What do you think about that? Like, is it?
Yeah, that's fair. I get that. And I get that people are happy to gamble, happy to lose money, happy to be here to speculate. And many people don't care if these things go to zero because we all understand the risks associated with it. My only counter to that is I think that's a bit myopic because if you do, let's say just on the off chance you're not someone who has 100% of your portfolio risk in just gambling celebrity coins and you actually do own some longer term assets like ETH or Bitcoin or Solana and whatnot, and you do care about the future of the space, you should care about the potential, as I said earlier, the potential headlines these things can make. And it's fine to be happy to speculate and just say, it's everyone for themselves. And if you lose money, that's on you. But if celebrities who are famous people have coins associated with them and lots of people start losing money on them, that's pretty bad press on a mainstream scale for crypto. And that's my fear for it. It's not, and people say, what's the difference between a celebrity rugging versus like an anonymous shitcoin dev rugging? Well, the difference is one of them is going to hit mainstream headlines and one of them isn't. One of them is materially worse for our industry from an optical and reputational standpoint. The other one isn't. So for me, it's like, I do want my long-term positions to go higher. I do want crypto adoption to rise and increase. But if you have headlines of celebrities rugging, that won't happen. And that's kind of like the counterpoint to everyone saying this is mainstream adoption. It's not if these guys end up rugging and it makes headlines.
So I think the press aspect is correct. My point is that I just don't even know if it's rugging anymore. I think people are just trading attention. People might trade a phrase of Elon Musk says, and they're really just playing like, oh, maybe this will be relevant for like a month, and maybe it's relevant for a year. They'll be playing like TikTok memes that come up, and they'll be like, okay, maybe this meme is going to be gone in the next week, but I'm okay trading that attention. It's just,
yeah, I get that.
Things have become more transient with how quickly we've had 500,000 tokens last month. Tons of these tokens are literally just relevant for like a day. But that obviously that's not the point of them from the start, but like people understand that the timeline of many crypto assets is no longer forever is basically what I'm getting at. I do think that this is really bullish for the L1s, particularly Solana, because it's seen the majority of this this interest. But I think people that were perhaps turned off and they see meme coins, they go, it's that's terrible. You can still think that. I'm just trying to give an understanding of what's going on this cycle, maybe versus what went on last cycle. There's far fewer coins. They were often related to a dog, and they would just have different variations of Doge or SHIB. This cycle is just like people are just betting on the attention of a topic, and they're doing it every single day. And you can do that with pretty much anything. Like I said, the Euros is a really good example. People they'll probably do it with players even. Like you're just betting on attention here, which I think is something to note. But yeah, that's been what people are doing every single day. The other big winner this week, one of the only L1s that's higher, is the Toncoin, the open network, which is obviously linked to Telegram. Flipped ETH active addresses this week. You've seen a huge rise in Ton gaming, these clickable games. They've seen some big investment from top VCs in the space. They've got a kind of an active gaming ecosystem being built out there. People are saying this is the Solana of last cycle. This is where we're starting to see real adoption of users at a scale that we only really saw on Solana last cycle. Have you played around with any of these Telegram games?
I haven't played around with any of them, and it continues to surprise me how little of the timeline has been talking about Tom, given everyone uses Telegram. I think it's starting to make some more sounds now, more noise now. Like, obviously, we've seen the token outperform many other tokens, well, most other alts actually, in the last few weeks and months. But I'm starting to see more and more people talk about it. I mean, think about how many users does Telegram have? Like, what's the total number of users?
800 million users. And this
Right.
is a coin which is now at 40 billion FTV. You know, this its current market cap is lower, and this is part of the FUD around it. Is kind of why it's similar to the Solana last cycle. A lot of the unlocks haven't happened, so its current market cap is at 20 billion, but it's fully diluted is at 40. But it feels as though Telegram is really pivoting towards crypto. There is some light FUD, and we think we've even spoken about it. The fact that the Telegram founder is based in Dubai and is Russian. There's been a lot of talk in the US that they may be under the crosshairs of a ban similar to TikTok at some stage, just because the US doesn't really control the privacy algorithm there. But at the same time, it's really embracing crypto. I would say 99% of my chats of people in crypto are on Telegram. And with that many users, it feels as though they could build a pretty persuasive blockchain here where they can onboard a lot of different people.
Yeah.
I think it's bigger in Asia. It's bigger in Asia and obviously in the Middle East because that's where they're based. But it does feel as though that is going to be a big winner. So I would say Solana meme coins and Toncoin have been the big winners this week. The big losers, we had the Curve founder. So there's been another bit of drama in DeFi, which is the Curve founder, which is perhaps one of the most popular DeFi protocols, kind of OG. This is DeFi 1.0, had taken out around $100 million of loans against his Curve position. So he had a bunch of the CRV native token and he took out loans on the platform against it and bought 2 mansions in Australia for him and his wife, seemingly. And then as the price of Curve has gone lower, he's now been liquidated on that. In a world where Uniswap just delayed its fee switch and DeFi governance tokens are under the crosshairs, this has not been another big win for DeFi this week. What did you make? What do you make of this?
When I first read it, I was like, wow, this is a pretty smart way to get out of his Curve tokens. But I think lots of people kind of called him out on it, and he refuted that. So we'll see. Did that headline say that he repaid 93% of
paid
the
93% of the final 10 million? Remember, this was a story that actually came out last year where he kind of got bailed out of this position before he bought he bought these 2 mansions last year in Australia. And that's when everyone was like, hold on, this guy's literally just borrowed against his Curve tokens and bought a couple of mansions in Australia, which was just kind of a wild move. And then he kind of got bailed out of it by a bunch of different industry people. Actually, there was some OTC sales that allowed him to raise liquidity to kind of help pay back some of the loans. But then he got liquidated in tens of millions this week. I think he just paid off the last little bits of it. So I don't know. Like, DeFi's just had a tough cycle, and they didn't need this. I don't think.
Is what he did that bad though? Like, in real life, if you're a C-suite executive and you have a ton of stock, you are able to borrow against it with a private bank, and then I guess you can just default on it. I don't know if those guys ever do or not. Or but isn't that the same thing? But it's just decentralized. Like, is it? And it's public. Like, is it not better? Yeah.
Yeah. I mean, people do margin loans all the time. That's
right.
That's how the rich take out liquidity, right? This is not unheard of. I think it's just not great when like the founder of one of the top DeFi protocols has this to happen, and it's so public the way it happens. But yeah, I agree. Like, it's probably not crazy. I don't know what the LTV is. Like, normally, I don't know what a normal margin loan LTV would be for stock, but I imagine it's low. And I think he probably got a pretty high LTV on this. So either way, not a great story. The other big story this week that came out was that Terraform Labs, which is the company behind Terra Luna, which was basically the epicenter of the explosion in crypto, which then subsequently took out 3AC, and then subsequently also took out Genesis, and finally SBF and FTX. They agreed to pay a $4.5 billion fine to the SEC. Do Kwon himself is 200 million of that, and they've admitted guilt. My main takeaway from this is that everyone else lost 40 billion in this Luna Terra destruction. How come the SEC's walking away with 4.5 billion? Like, surely this should have been given back to everyone. I just don't. It seems wild to me that the SEC's got 4.5 billion out of this, and they didn't protect anyone, but they've got 4.5 billion.
Yeah, that's confusing, isn't it? How is that not being redistributed to victims?
That's just wild to me. Like, surely this is if you're the SEC, you want it to be repaid to users. I mean, obviously this is a South Korean based company, and a lot of the people got hurt on this were global, right? This really did take out a lot of different people. But surely the estate of I don't know if Terraform Labs actually went into bankruptcy, but you would assume that they would be redistributing billions of dollars if they have it. And surely this isn't the whole treasury as well. Like they're probably going to continue. So
Do Kwon is personally liable or personally paying $205 million as well. I saw $204 million.
Right, but is that? I mean, how much
did the
SEC? Yeah, how much did CZ pay the other day?
$4
CZ fine to SEC. He paid a decent amount. Like he paid. Wow. So he's part of a $3 billion settlement, but I think he was a much larger bit of that himself.
Yeah,
which I thought was kind of wild. But yeah, I just don't know like how they're basically walking away with this amount of money. But if you got hurt in that, maybe call up the SEC and try and get your money back. Gary Gensler's just walking away with 4.5 billion here, which I just thought was crazy, given he did basically nothing to try and help that, even though everyone was screaming that it was a fraud before it happened. He's managed to walk away with a $4.5 billion fine ex post. I don't really know. Just doesn't really seem to make any sense for me. And then the final thing was just gaming tokens. Gaming has been one of the hottest narratives. Although Ton is doing relatively well, it's definitely been a sector which is just, people thought this was the cycle for gaming, and it hasn't really happened, at least on ETH. You've seen like these clicky games are the only thing that's happened. All these other big AAA games, their tokens are down a lot, 30 to 40% for the majority of them this week. Prime Parallel TCG was one of the most popular ones, and that token had to actually change its tokenomics on the back of recent performance. What do you think? Is this still? Are you still bullish on crypto gaming? Do you think it can come back? Do you think it's just going to be these sort of mobile games like Telegram's doing, or do you think we can actually have these full economies, GTA style, or that can work with crypto?
Crypto gaming is just one of those things that I think makes sense to everyone, but for whatever reason, it hasn't been executed to a level where they've managed to mass on board a ton of users and have a game that's become like hugely viral or popular. I think that's been the biggest problem. Like, there's that, and then it's just the tokenomics of them as well, and the way that they raise capital and the VCs that are in them, and the ongoing selling of tokens over the next 2, 3, 4, 5 years. I think it makes those tokens hard to rally. And it's the thing, like, with Axie, like the game, I think, was not a game itself that people loved playing, but because the token did so well for a time period in time, there was a ton of attention on it, a ton of focus. But once all these tokens are vesting and they're just designed almost by design, just trend lower and lower and lower over time, it's really hard to onboard new users, because who's going to be like, oh, I want to play this sub-tier game to earn this token that goes lower? Like, it's not really a strong pitch to anyone, right? So until all that stuff changes, I think it's going to be hard. And I think you'll get moments, have moments in time where you had this throughout 2020 and 2021, you had this at the end of last year and beginning of this year. You have moments in time where everyone's like, oh yeah, like crypto gaming is going to be massive, and now is the time. Now it's finally going to take off, and people run these narratives, and the first like 2 or 3 or 4 new coins and new games that come out when they haven't started unlocking yet, and they're brand new and shiny, and people invested in them at very low valuations because it was kind of like in that transition period between the bear market and the bull market. So you hear about people making 50x and 100x from these trades, and then everyone suddenly jumps into gaming. You kind of have those periods, and then eventually, after a period of time, everyone just gets burnt and it dies a bit again. So I just think for gaming to work, you need to have a genuine AAA game that goes viral and has a ton of users with an in-game token that's interoperable, that actually has value, and its tokenomics aren't designed such that a bunch of VCs who are up 50 to 100x on it are perpetually selling it over the next 3 years. That's the biggest problem, and that's just not. I feel like I talk about this every show now, but it's not just gaming. It's true for like many altcoins now, and even more so now than in the past, because there's been so much investment in the space. But until that's fixed, it's just designed to fail, I think. And those are the two biggest issues. And the problem is, like, if you're someone like Activision or Rockstar Games, or these people who are making like real AAA games, they're making a killing out of all these games and stuff. Like, why? They have no need or desire to move into crypto. They're already making a shit ton of money. They already have a captive audience. Like, why would they risk that to switch? Like, what's the? Do you know what I mean? Like, what's the bull case for one of these guys to switch? So you need someone crypto native to make a really good game, and those things take years and years and years to achieve. So I'm
just not even sure if it's a good game. That's the thing. Like, I think that when you add such intrinsic financialization to something, suddenly the gameplay can kind of be ruined, and you basically invite bot users, and you invite users that aren't really playing the game. They're just farming. Even with a really good game, you'd end up with like guilds of players who are there just to like ruin the economics of it. I think it's going to be interesting to see like how crypto I do think it can be useful for tokenization of assets. Like, I do think NFTs work quite well with gaming, that you could have marketplaces for that sort of stuff. But actual in-game tokens, I think they run into a lot of issues. This cycle, you've seen kind of an acceptance of that, and a lot of the top things that came this cycle were more infrastructure plays. But even then, they've had a real tough time this cycle, because you just haven't seen the adoption in the games, and the infrastructure hasn't really gotten to scale. So gaming feels like it may not even be a this cycle thing now. Like, it feels as though what was meant to be six to 12 months ago, everyone was like, this is going to be the thing. This is the time. There's a big AAA game, Star Atlas, which is launching on Solana at the moment, which looks really good, looks amazing. But you got to question if that doesn't work, or there's a few other AAA games, which I'm not just mentioning them, but if you start to see actually good games not working in crypto, I think they're going to have a big reassessment of how it's really going to work. Because I just think that this financialization sometimes can ruin things. Right. Well,
should we do some questions?
Yeah, that was what I was going to say too. Let's get into the your favorite bit of the show, where you become the quiz master.
Okay. First question
really gone south during the show.
I was going to say, yeah, we did end up breaking that.
Oh god,
breaking that support.
I repeat, we've broken support. Yeah. Right, we're heading to 60K there.
It's been nice knowing you guys.
Yeah.
Zoran Cole was right.
Zoran Cole's gone for 42K Bitcoin. I think we've got quite a big movement for a 5% move.
All right, first question. This is from Crypto Compliant on Discord. What due diligence have you done around the Blast L2? I see you've been very active over there. As a community, a bunch of us have been enjoying the fruits of Blast 2, but worry about how centralized it is and the potential it might rug. So he's super interested to hear about our thoughts on how we've gotten comfortable with the third-party risk.
It feels like more of a question to you. I think some of the questions originally around Blast were the fact that it wasn't an L2. It was literally just you gave your money to a multi-sig who put them onto Lido, and there wasn't really a blockchain behind it or an L2 behind it. Since then, the testnet went live, and they're obviously testnet went live, and then obviously we're on mainnet now, and they're going to launch the token. All L2s, you dig into the biggest L2s in this space, Arbitrum, Optimism, there's centralization in many different aspects. Optimism made some changes even this week that made it slightly more decentralized, but there's huge centralization around different bits of L2s and bits of their security. So don't think that it's just Blast that has this issue. I think it's an L2 wide issue. Do I think it's perhaps more centralized than others? Yes. But I also think that's maybe that's by design. I don't know. What do you think, OSF?
I think it's by design. I just don't think, if you look at the dApps on Blast, they're very like degen, risk-taking focused. There's a lot of like casino style elements to it. So I think it's not, it doesn't feel like to me it's a chain that was like built to be this great solution to decentralization and all that. Like it's a yield, a platform that bears a chain that bears native yield, which I think has a lot of value to dApps that are able to attract a large amount of TVL because you're able to earn 4% on that if it's in ETH or 10% on that if it's in USDB. And so, if you're worried about the centralization, you have to think about who's running it. It's being run by Pac-Man, who has raised capital from the likes of Paradigm, one of the larger crypto VCs out there, and he successfully founded and created Blur, which is fully functional and hasn't rugged or anything like that today. And now they're doing the same thing with Blast too, and he's basically a doxed founder. So, like if it's one of those things that's created by a completely anonymous team and there's no information who they are and it hasn't attracted investment from top tier VC companies, then yeah, I would be worried about that kind of risk. But otherwise, I don't see the risk of it. Those risks that this person specifies is no more or less than any other L2 out there, to Mando's point. So all these things inherently always have a risk, and where the risk is higher, the reward can be higher. And that's just for all of us to judge when we get involved in these ecosystems. But I personally have invested in Blur, and we've invested in Blast too, and I just have some comfort around, a lot of comfort for me around Pac-Man as a founder. I hope I don't ever have to regret that statement. But I think it's for me, I think it's someone who's quite talented, who's earned his stripes and has started to build a very proven track record, in my opinion. All right, next question. This is from Pericles on the Real Vision website. Think the election season in Europe is delaying investments. I guess that question means, given the upcoming UK and various European elections, is it delaying people from deploying capital?
You tell me. Like, I don't know about the sentiment in the UK might be slightly different because I think there's questions about taxation there. No one said that to me, so but maybe I felt in the UK maybe more of an issue just because of it's maybe quite a big change. But I haven't heard that sort of sentiment, at least where I'm in Europe.
I think
yeah.
I think times of election generally are times of uncertainty, especially in the world we're in now. So if someone is risk averse, they're probably more likely to hold cash than they are to actually invest it into anything, let alone crypto. So yeah, like a holistic scale, I would imagine once things are clearer, and provided there aren't any materially adverse policy changes towards investing, you could think that maybe investment picks up post-election, but I don't think it's like a meaningful impact that's affecting asset prices right now. Okay, next question. With unemployment, this is from Peter. With unemployment hitting 4%, do you think the Fed are about to shock us all with a rate cut? ECB have cut. The UK is about to cut. What do you think there?
I think there's now a decent chance they have 2 rate cuts this year, not just one. PPI and TPI coming in lower than expected, I think is like the interest rates that the Fed is currently paying, or at least the US government is currently paying, are gargantuan. They are absolutely massive. We're talking into the trillions now. I don't think they can keep long-term interest rates at this sort of level. So yeah, I think they are going to have to cut. I think the thing that does complicate stuff there is the election. Doing a cut in September, that could be very political heading into that election. I believe there is 3 days after the election, and I reckon we'll see probably our first cut then, and then we'll probably see one in like the December. So I think we'll probably see 2 late cuts this year.
I think so too. I think it's only a matter of time before the Fed is forced to cut, and I just think they didn't. I just think the last FOMC was pointless because I think they didn't factor in any recent data, in my opinion. And even though they say, "Oh, well, Powell says everyone who's at the FOMC has the option to change their votes, etc., once new information has come to light," but he said most people choose not to. That to me just says it's the middle of summer, these guys, and some new CPI data comes in. These guys aren't suddenly leaving their holiday homes like, oh, I've got to actually change my view. They're not doing that now. But I think, in my view, if data in the US for July is similar to the data we've just seen in June, I think you'll see a massive turnaround in the commentary and the tune out of the Fed at the end of July. Which I think will lead the path to rate cuts in September and possibly even October as well, or November, whatever the next FOMC is. Okay, next question. This is from Melvin. Do we really need a new narrative for Bitcoin to go up? We just had the halving, ETFs are here, slowly institutions, governments and such are adding it to their balance sheets. Macro setup is favorable for risk assets to rise. I feel like only crypto Twitter seems short-term bearish. I'm 100% with you, Melvin.
Yeah, I agree with you. I think what we were saying is that the narratives are just there, but sometimes you need that extra spark. When things go sideways, like last year, I remember being super bullish and we just went sideways forever. We just went sideways for so long. Even after, we kind of basically knew the ETFs were going to come. So I've just noticed this is that sometimes to get out of a long-term chop, you need that extra spark. You need people to firstly start to lose hope, which is what is happening right now. Like people getting frustrated. You'll probably see people on a day like today going like max short, that is perfect, right? Like you're sitting here going like, why are you going max short? There's nothing that says we should go max short, but that sort of setup is what you need. And then you need that one good piece of news that just sends you. So I don't think we need the long-term narratives are really with Bitcoin this time and with crypto this time. But I just think we probably need one sort of spark which sends us there.
Yeah.
Imagine if Trump comes out and says 0 tax on crypto.
Yeah.
Imagine that.
I agree. I think
sort of big tax breaks. You'd see that's the sort of thing I'm kind of pointing at here. That why I said like a political sort of move, because Trump, I think probably provides the best chance for a spark here, just into the election.
Yeah, I agree with that. Okay, next question from JP. What do you think about the impact on crypto from the top hedge funds doing the carry trade, delta neutral, between shorting futures and holding long spot, holding or being long spot? I believe you mentioned miners, but was wondering if these hedge fund carry trades were having a greater impact.
Well, they should theoretically be delta neutral, but what they do is, and by that I mean they should have no net impact. When you buy spot and short futures, you should have generally little impact, but it does add to the gross risk out there, like the open interest. In a scenario where we actually saw negative funding, I think it would be interesting because you'd have these huge short positions, and And the way that crypto works with DeFi is that you get like cascading liquidations. And there's definitely a massive increase in obviously short interest in the market right now. So I think that's interesting. I think what it has done, unfortunately, is it's difficult to look at the ETF inflows anymore. In fact, I've started to look at stablecoin inflows or stablecoin total market cap as a better indicator of inflows into crypto, mainly just Tether, but inflows into crypto than the Bitcoin ETF, because the Bitcoin ETF inflows, for those who aren't aware, it's now becoming apparent that the majority or a huge number of the larger holders of the Bitcoin ETF are hedge funds. And they're not owning this outright. They're owning this by owning the spot Bitcoin ETF, and then they are shorting futures, and they're basically taking in the carry trade. It's a basis trade. You take in the yield on that short, because normally in crypto, futures longs pay futures shorts. So if you have a short position, you're being paid to hold that position. So you end up with this position which is delta neutral, as in it doesn't matter what price Bitcoin does, but you're probably locking in like a 10 to 30% yield at the moment. Now that yield can vary depending on the demand, and as demand for this trade grows, that yield will go lower and can even go negative. And if it goes negative, then it could get a little bit messy for this trade, I think. What do you think, OSF?
Yeah, I think the interesting thing about this trade is that for the basis to exist, it means there's still so much interest for people to go levered long, I guess, right? And all these hedge funds are coming in and taking the other side, and that's why we just haven't seen like funding go crazy ever since the Bitcoin ETFs kind of got fully fledged. So in terms of the market impact, it's, as Michael said, it's like it's delta neutral, really. Like it shouldn't really have an impact. If one thing I would say is, and this is just like a thought I have from the old TradFi days, but whenever you have a big basis position and everyone has this massive basis position on, because it becomes such a consensus trade, sometimes that basis can actually widen and get worse, because banks and hedge funds and everyone, they all have capital limits, right? They have gross balance sheet limits. So they're able to put on this trade up to a certain level. So let's say, okay, we're clipping 20% yield on this trade. We've added to it. Now we've maxed out. Now let's say the yield goes to 30%. The ARB goes to 30%. So they add to it. Now let's say like the basis goes to 40%. Well, some of them can add to it, but now you're down. Your mark to market is down from where you initially put that trade on. And you have all these, even though you have a delta neutral trade, which like should be like risk free directionally for the market, that basis itself can change. And now suddenly you have this massive like unrealized P&L hit. And as that basis continues to widen, if it does continue to widen, your unrealized P&L gets worse and worse and worse until you get to the point where your boss taps you on the shoulder and is like, look, you gotta stop out this position. And then you just have this like crazy thing where the basis goes crazy. So like, I don't, what that would mean if this ever did happen, because it's such a big consensus trade, it would mean the basis would widen a lot. So
easily happen.
The spot prices would be like much lower than the futures prices, and that would just cause like a massive like differential between the two things. But it shouldn't have a massive directional impact for the market. But yeah, like if that ever did happen, these guys have to stop out. You will probably see people scrambling to buy back their future shorts and then dumping the Bitcoin ETFs. And the headline figures that retail will see is like Bitcoin ETF outflows, which then I think would probably cause the market to go lower, because that headline figure looks bad. And generally speaking, when people have to unwind risk, I think that's usually a bearish indicator for the market rather than things going higher. So if that ever happens, it may not. And maybe this market is way more efficient than like distressed or high yield credit was. And I'm sure people have these types of basis trades on in commodities all the time and run them for very long periods of time. But if that ever does happen, I would be like, if I saw the basis go a lot wider and wider and wider, I'd be worried. Like I'd be selling risk there for sure, I think. All right, I think we can call it a day there.
Okay.
Yeah. So
over the course of the show, Bitcoin fell $1,000, just over.
we're 2 for 2 and sending the market lower on a Friday.
Yeah, we really are, aren't we? Friday's not a good day. They say Monday's the best day to buy crypto recently. So hopefully everything reverses by Monday.
Yeah.
But yeah, we will see you again next week, guys. Obviously, subscribe to the YouTube channel. You can find us on the Real Vision website. And we do every 4 weeks, we do kind of a question and answer session just for Real Vision members. So go sign up there as well. Anyway, we will see you next week, guys. Thanks for tuning in.